welcome to our live stream. Big shout out to Digital Penang for making this happen, putting all this together. Today we got quite a fair bit to unpack. Fintech, unlock future trends of finance. If you look at the news today, AI is everywhere. E-wallets becoming the norm. Digital assets are booming. So the question that I always get asked is like, is TradFi getting irrelevant? Are the traditional banks being eliminated? If you ask me my take, definitely not. The way I look at it is that we are in this beautiful building, beautiful colonial building that Digital Penang is. For me, TradFi, traditional banking is the concrete foundation of a house. And what we're building, or what fintech startups are doing, is basically the smart layer of the solid foundation. So yeah, I'm 𝐒𝐩𝐿 from Sinegy, Digital Asset Exchange. I'm the DEX lead. And with me co-hosting this podcast is Kain, CTO of FinHero.
Yeah, thanks, Jack. Good intro, and do want to shout out that thanks for having us and hosting us here at Digital Penang. We are also on TikTok right now, streaming live. So if you have a question or a shout out or anything, go ahead and drop an emoji or some human text if you like. To Jack's point, there's a lot of talk right now about a lot of these topics. So we're going to dive into some very pressing topics on fintech and finance and tech in general, I think. But first, I'd like to introduce our company too, FinHero, because it's not so widely known, I think, everywhere yet. Definitely in Penang, we have a good presence. That's where it was founded about 5 years ago. And now we're just right down the street. So I had a nice leisurely walk here. Kind of hot at the moment, but it's fine.
It's actually pretty hot.
Yeah.
Yeah.
Kind of hot here in Penang, but keep the walk short. Keep an umbrella if you need to. And we made it. FinHero, we build solutions for financial companies, credit bureaus, banks. We also try to support the borrower on the other side, and primarily looking to find opportunities where we can get the SMEs that often go overlooked in the financial industry, get them a good chance to have fair opportunity in the finance industry. So
cool.
That's a little bit on FinHero. What about Sinegy, Jack?
We are pretty similar to FinHero in the sense that we are both Penang born. We are regulated by SC, Securities Commission. So that makes us the one of the first homegrown crypto exchange in Malaysia. And like what Kain is saying, I mean, like these days, having all these solutions and all that, I think it's time maybe you jump right in, Kain. At the intersection between AI and credit, like what's your, at your vantage point, like what do you see? What do you see the future of fintech going in the next 5 to 10 years, if you could see that far?
Yeah, I mean, it's a interesting question because I feel like every day I wake up, some groundbreaking thing is happening. And because of the pace of change rapidly accelerating, I tend to see things as getting more uncertain as time goes on. And that makes predicting things exceptionally difficult.
Yeah.
So that's why predictions are almost bound to be wrong by definition of what's going on right now. But the trends are pretty obvious. I think I see a lot going on in your space on the crypto side and Bitcoin and regulation there as well. Like you said, strong foundations in regulation and institutions merging a bit with an industry that was long thought to be for scammers and drug dealers and so forth. So now we're actually seeing, just now announced recently, the Senate is going to see the Clarity Act.
Yeah.
So that's kind of interesting. And then we had the Genius Act kick in earlier in the year.
Which is quite funny. I think like if you look back at like maybe the old events, your consensus, your token 2049, those big events, you always see like the degens dominating like the audience. I think recently there's one consensus in Miami, and you could see people suiting up. I think that kind of reflects where the future of fintech is going. I think at first it was like a non-mainstream technology growing on its own, having developers building innovative stuff, creative stuff on it. But I think what happened in the past 2 to 3 years is the institutional interest that is definitely gaining traction on crypto.
Yeah. Yeah, and something in the tech world that I've been trying to help educate my team and the broader industry on too is these technologies coming out like X402 from Coinbase.
Oh yeah.
So you've got some developments here that are just in the very early stages,
Yeah.
which I could see really getting adopted very fast if they catch on.
I think it hit like 40 plus 50 million already transacted on X402.
We should probably talk about what it is a little bit. It's a protocol that uses the HTTP 402 response code to say, hey, you need to pay for this. And it lets an agent decide whether to transfer USDC into a wallet via a mediator like Coinbase, who kind of acts like an escrow in the transaction. So it's a way of providing agents a way to pay for services where they didn't have that option before. And Stripe is adopting it. So you see some big players.
If I'm not mistaken, I think 402 is supposed to be the rejection code, right?
Yeah, rejection code for some reason of like payment. It's insufficient.
I think now how they innovate on it is like, so if you have not enough money, they'll give you 402. But like how they turn it around is that when an agent actually do a request, they give you X402, and then after that the agent would know what kind of payload to put in when they put in a request. And I think Coinbase is actually doing it with Cloudflare, if I'm not mistaken, for this protocol.
They've open sourced it, so
okay.
So anyone can integrate.
But I think like what you said, like they are not the only one doing it these days. It's like Stripe with Tempo doing something crazy. I think it's called MPP, if I'm not mistaken. So I think like what you say, because it's HTTP, right? So imagine every time you got to make any payment, it's going to be like every single request every time. So like, from us doing like data streaming and all that, it's definitely inefficient if you do it this way. So like they probably draw inspiration from how WebSocket is built, and MPP I think takes exactly that kind of idea, where if you're an agent that wants to make payments and whatnot, they basically establish a continuous streaming connection with the service provider, which is pretty cool if you ask me.
Yeah, it's actually the streaming money dream that I heard about many years ago when I first got into blockchain and Bitcoin. But to take it a step further as well, something that FinHero is thinking about is agents taking out loans as well.
Oh wow! Well, that definitely answers my question. Like, because when I asked you like how do you see this whole thing will go in the 5 to 10 years, right? But I mean, looking at how things go, like it could happen even before.
Yeah, and I mean, it's leverage for good reason in most cases, but with all things leverage, you end up with quite a bit of risk, right? But in any case, I see people that want to do startups, right? And when you do a startup, you need to kind of raise funds, and this is the kind of thing your agent can go out and help you with. I don't know about VC capital or anything like that yet, but certainly in the product space, I think a lot of e-commerce platforms are going to have the buy now, pay laters out there. The agent's going to have a reputation. And there's also already, on Ethereum, there's already these protocols for agent reputation, agent identity, these kinds of things, which leads to agent credit scores.
I think I was just reading up recently on this Ethereum improvement proposal.
EIP? Or?
I think it's 7702, if I'm not mistaken, which is basically allowing any standard legacy wallets to act as a smart contract at a single transaction. And I think that whole agentic finance thing, it goes back to why Sinegy is doing what we're doing. I mean, we are a regulated crypto exchange. And if you think about all the innovation that's going on in the agent space, crypto is essentially the native money for agents. All the protocols that we just spoke about, your X402,
stable coins.
Stable coins. So like crypto basically becomes the language of money that agents can speak to freely. It doesn't need to go to the bank. set up an account. It doesn't need a signature, but it's signature in a different way. But you get what I mean.
Yeah, an identity.
Yeah.
So that they're building these protocols, and a lot of them are open source and just fully transparent.
Yep.
So blockchain, of course, is known to be fully transparent. In some cases, some of these institutions I've seen, like Fidelity is a big one in the US, right? Adopting stable coins, having their own. So do you see a lot of, in Malaysia, the stablecoin systems coming up too?
Yeah, definitely. I think we've already seen in the news, like in the past 12 months, people rolling out their version of stablecoin. A couple of types of stable coins that people can do. Some of them is pure synthetic, like Ethena, but which I think is technically a bit more difficult to execute. But the easiest one to do is definitely the one-to-one fiat-backed stable coins. I think recently there's MYRC. I think I saw something going on down south. There's this JDT ringgit. And I think even Bank Negara recently, they actually put up job posts hiring for digital assets expert. So I think from cues like this, you can see where the future of fintech is. At least like not just globally, right, but also in Malaysia. And I would add in that Malaysia, a lot of people don't see it, but I think Malaysia is a quiet pioneer in many instances. So like take Sinegy for example. When the Securities Commission gave us the license, I think Malaysia was one of the first in Asia to actually regulate the market. And then if you talk about the decentralized protocols, we have companies like 𝐒𝐻𝐤𝐚𝐥
Malaysian companies like 𝐒𝐤𝐞𝐜𝐤𝐚𝐥.
𝐒𝐤𝐿𝐴𝐚𝐥, and then recently with all the L2 rollouts and whatnot that made possible, companies like Pandal. Pandal is also Malaysian. And Virtuals, which is a Asian development framework company. So yeah, actually in terms of the pace of innovation, I wouldn't discount Malaysia. Like where we are going, even though the things that we talk about, your X402 and all, it sounds so far away, but I would say probably it's not as far away as we think it is.
Yeah, I think that the avalanche can occur when the tech proves to be safe, regulated, cheaper. If Stripe is adopting it, you can kind of see where this is going. And a lot of it just comes down to making these things more efficient. So I think that's what fintech sort of is for in the first place.
When Stripe is doing the protocol, do you think there'll be a lot of different protocols coming up? And then all of them will be like competing with each other, like a bit of a protocol war happening.
The payment gateway space has been very competitive for a long time.
Yeah.
And so the future there is also very interesting because I think a lot of these companies, they're looking for ways to innovate.
Yeah.
And so now with the regulations in place, I think that they're kind of free to innovate more on these stablecoin protocols. Coinbase is open source. And with these legislations going through now that we're talking about, I think the Genius Act definitely sets precedent for other countries to come in and get on that regulated bandwagon. So that's very interesting. And of course, FinHero has shareholders from payment gateways as well. So we work on that side of the system as well and try to innovate in that area. A lot of it ends up having to do with alternative data. That's another future goal of ours is capturing and safely processing all this alternative data that, you could say even just a few years ago was very hard to use all that data to help people get access to financing. But now, with what we're seeing with all these, of course, AI is helping, but just digital systems in general are far more advanced now, can process terabytes of data. Having access to like big data tools is as easy as clicking a couple buttons or even just running an MCP off your Claude terminal and hitting Azure, right? Like an AZ-CLI and just, spin me up a scalable resource.
I think the whole data part is one of the reasons why I think crypto has been quietly at the back building up. Say 6-7 years ago, a lot of the decentralized data were not there. They were not picked up by your decentralized oracles right now, like say Chainlink or whatever protocols that are out there. I think all these other tools that are building up are making it a lot easier for what we were mentioning earlier, like agentic finance. Think about all these oracles that are out there. If the agents can't communicate with this or understand all this data available easily, then I think it will be difficult for anyone to train the LLM to actually conduct any agentic finance, because your agents will always lack that context, the important data that that should be fed into agents to make financial decisions, right?
Yeah.
So I think that's definitely one of the reasons. But I think another one.
There's also a tension with compliance as well.
Yeah.
Right.
I think compliance definitely is one of the main thing.
It's very difficult to set off OpenClaw to go do all your financial work and expect a good compliant result.
But that is definitely possible though. I mean, like you mentioned about identity. Instead of
KYC
instead of KYC, like in the future it will be KYA. You gotta know your agent, and I think one thing that they definitely need to do, people like us need to do for the industry, is definitely setting up the framework when it comes to all these liabilities. Who's involved in this? Who delegated whatever role to the agent to do A, B, C, or X, Y, Z, and then we all have a framework to work in, right? Because right now, I mean, if you know AI or LLM, it's inherently
you can't send an agent to jail. Is that the problem?
Yeah, I guess you need a virtual jail for it.
Yeah.
So yeah, it's
or you need someone you can go to put the cuffs on, right?
Yeah. So and knowing how fast agents are growing these days, who knows, man? What if someone frames you and say that this agent actually belongs to Kain?
Right.
Like, what are you gonna do about it?
Yeah, I don't know, because right now I might have some agents out there doing something
that you're not even.
Maybe I should check.
Just prompt, right? Like, are you doing anything malicious?
Yeah, and so one more segue into another topic in the future, I think, is, and I see it over and over, and this one's a little more well-known already, is attention-based economy. So instead of labor-based, I see a lot of attention-based aspects of the economy popping up as the more prominent factor. Where are people spending their time? Where do they want to spend their time?
I thought all our time is already absorbed by all the social media platforms.
Yeah, right.
I mean, we are on TikTok live right now, right? So.
Well, then I guess it bears a question of, if I have 5 agents out there doing research for me, is that me leveraging attention? Like, is that sort of an extension of me having attention elsewhere? Philosophical, sorry.
Yeah, that goes very deep, very suddenly.
Yeah.
Yes and no. I think, like, when it comes to attention, the reason why it can be a sustainable economy is because of how people change the consumption behavior, right?
Yeah.
When we used to stay at home and the interaction is with the TV, the amount of the degree that where your consumption behavior can change is very limited. I think what happened when we are all chained to our smartphones these days is that all our consumption behavior has changed. I mean, to answer your question on like whether that's what you're referring to when it comes to attention-based.
Well, and I love a good podcast. It's been a while since I've been on one, but can you watch every podcast these days? No, right? It's
nope.
Like you got to pick and choose between.
Yeah.
So many of them are just popping up. I had a stat a while back that was kind of crazy. Is every day there's more than 80 years worth of video posted on YouTube.
80 years.
A whole human lifetime.
Okay. So basically, it's impossible to consume all the content. So right now, with the agents, like, do you think there's a way where we can basically cut it like shorter and shorter and shorter, where people can learn more stuff?
I think it goes back to what I was saying about agents doing work for you. If they can go out there and do research for you and get little jobs done that you couldn't get done before, you can get attention back. You can get like attention capital back and use it to do what you want to do more freely, I think.
Let's take a step back. Like I think just now you mentioned that if an agent were to take a loan, how different would it be for FinHero, let's say when you have to evaluate his or her or its credit risk?
Yeah, it's a historical context. If it's all on the blockchain, it makes it much more auditable. You've got who's behind it could also be, like you said, if people are accountable.
Yeah.
Let's say the agent is solidly associated with a company that has a good reputation, then that agent might have a better time borrowing money from liquidity pools.
The company can even put in a guarantee, like it will continuously fund this wallet at a given time, right?
DeFi contracts.
Yeah. Now, because crypto is essentially programmable money.
Yeah.
So I think what you were saying is exactly that. Like basically, the person behind or the entity behind can basically set up all these pre-configured smart contracts or predetermined even wallet funding limit to make it possible.
Yeah, and I just think that from the small business standpoint, it really helps a lot because liquidity pools are these things that they're the necessary component for lending.
Yep.
What I find hard in the fintech space is actually the liquidity, right? It's actually finding
actual money.
Yeah, finding those who are willing to lend it. And sure, we have relationships with banks.
Yeah.
But the amount of underwriting overhead that you have to go through to get a bank to issue a loan and get it done in a regulated way, it's a lot, right? And so for SMEs who only want smaller loans that cost the bank a lot more in ratio, cost of underwriting per benefit on the loan side is very high cost. So that ratio of cost to benefit is.
I think the whole liquidity pool thing is often a chicken and egg situation.
Yeah.
I mean, if you look at the DeFi world, I mean, you have your Aave having your lending protocols, and they bootstrap a lot of their liquidity pools. Yeah. And then recently, Solana basically just work with using Morpho, allow lending to happen based on the amount of Solana that you have. I'm sure there are other protocols out there that give you collateralized loans. I think for agents, it would probably take up similar form because, like what you said, it is started up by someone like Coinbase, which is as crypto native as it gets.
Yeah.
And I think given how a lot of the liquidity pools are started up, probably the initial phase, it will be the same thing. It will come from people with very big balls, willing to take up high risk for high rewards. And I think that's where the liquidity pool will probably get started up.
Yeah.
Yeah.
I think there's also challenges, right? So we can go into some of the real industry challenges here.
Yeah, real industry challenge.
So I talked about SMEs, right? And that's kind of a focus of ours. So that's going to be one of my themes. But when I talk about liquidity pools and that chicken and egg problem that you talk about, it's really hard to have a startup that has working capital and keep your startup alive with new investment and growth opportunity. It's one of those challenges that we have too, right?
I think for us it's a bit different. Our platform is already set up. The whole thing is running. I think for us, when it comes to industry challenge for Sinegy, is mainly the trust deficit. I think a lot of people still associate Bitcoin with, like what you said earlier, a tool for drug dealers,
nefarious,
nefarious activities. But I think what they're missing out on is all the other innovation is happening in the background. So like recently, Bitcoin is the most secure network in the world, but it's also extremely rigid. The block happens every 10 minutes. So, I mean, there are already like thousands of attempts at people trying to make Bitcoin into a usable money. But I mean, I'm excited to announce that Sinegy will be integrating Lightning Network onto our platform, powered by Lightspark, which is started up by this guy called David Marcus, former president of PayPal or something. But yeah, so like I think what the industry challenge like Sinegy face is a trust deficit. A lot of people don't quite know like what other stuff is happening, but it is our job to try and solve this challenge.
I'd agree with that. The brand recognition and the relationships you have to build over time it's difficult in this industry.
And that takes a lot of money as well.
Yeah.
Yeah.
A lot of trips to KL. A lot of meetings.
A lot of events.
So
handing out flyers.
We did one recently at 𝐒𝐲𝐞𝐜𝐢𝐚𝐥 𝐆𝐮𝐞𝐬𝐭𝐬, right?
Oh yeah, we did a pretty good one last year. So I mean, for context, Sinegy and FinHero did an event last year with Kain being our speaker. So do you want to tell us more about that?
Sure. It was a talk that I put together for this event, and for that event, I was actually representing my social media account, 𝐒𝐲𝐞𝐜𝐚𝐥. But that was a lot of fun, and I did bring up, of course, FinHero and Sinegy as kind of like friendly brands, right? We do a lot of those events together. We have seen each other at other events here in Penang. And, that talk was mainly about macroeconomics and liquidity and how it eventually led to me creating a trading bot on Sinegy. So that's how I'll tie it all together.
Oh, nice. So yeah, we do have at least decent API documentation for you to work on your trading bot, I guess.
I wouldn't know. I just pasted it into Claude and it went off and built the bot. So.
Yeah, they just check like every hour, right? I solve this. Don't ask me for approval anymore.
So, but yeah, I mean, I put my 𝐒𝐻𝐿Yenergized.com macroeconomic data online, and that also has MCP with X402, so agents can come and pay for my indicators. So that's one way of accessing the service. And then...
How long have you been using that X402?
Oh, not long. I implemented it in this one app for the last 3-4 months.
Is it stable?
I've only done it on testnet.
Okay.
And I think I have 0 customers on mainnet. The thing I'm not great at is marketing.
You can be your first customer.
Yeah, exactly.
I think, Kain, you were saying how like your 𝐒𝐻𝐿Yenergized indicators, you are trying to you're monetizing it by selling the indicators. I mean, we were talking about Ethereum improvement protocols. I remember reading up on one ERC standard, which is ERC 4626, if I'm not mistaken, which is like a standard vault interface where anyone can make a call to see what's the total assets, what's the total balance to ensure transparency. Like, do you think that would be another viable pathway for let's say, 𝐒𝐻𝐿Yenergized to move forward?
Trying to make the connection to that, I think what my process was, it was, can I create a way for trading bots to have access to data and pay me a little bit for it, for my effort, right? And so I don't know if that plays into it, but I'm sure it's related in some way.
I think maybe let me rephrase it, like, because you mentioned quite a fair bit on liquidity AMMs as well, and trying to bootstrap that liquidity is always a challenge. But do you think like having, let's say, if you were to adopt and implement the ERC 4626 for the vault that basically allow capital to come in, then that would be a good way to bootstrap the liquidity pool.
This is much more on the side of FinHero now, where we're building a financial gateway for borrowers and lenders. And so we have some programs that we're spinning up, and we always do. We always have a lot of programs. Like one of them that we already launched, which I can talk about, is Muda. This is auto loans. And so you go to Muda, we have an offering for a loan application. Behind that loan application is a major bank, RHB. But if there were other options, the borrowers that come to buy a car who are turned away, declined, could go to alternative options. And so by plugging in these other liquidity pools, these alternatives, I think that's where our gateway could be enhanced to have more options on the lender side.
Do you foresee any regulatory issue like setting up such liquidity pools?
Certainly. Huge problem for us is always making sure we're compliant, always making sure that we're not breaking any laws. And this definitely plays into a lot of that regulatory stuff we were talking about earlier. Yeah. I think that the US is a little ahead of the game right now in terms of Genius Act and now Clarity.
Yeah.
I think if that clarity can come along here eventually, and it probably will quite quickly, we will have the ability to offer up products and services on, say, like an e-commerce platform, where when you do the buy now, pay later or the credit, you're applying for a loan, you don't really even have to care that it's USDC on the other side or a Malaysian stablecoin. If it's in that pool that's regulated and it's fully understood by all parties to be legitimate money, then who cares? I'm getting my product delivered to me. Someone else on the other side is getting their money. The cash flow is good.
It does sound like a massive undertaking.
Yeah.
Because if you think about the whole experience, like right now, if someone were to go to Muda, they click on a car that they like, and then they go through the whole loan application. And then on the other side, you would need to have another interface and the whole backend that supports it, that basically works out your liquidity AMM or liquidity vault.
I think one of the risks you might be touching on is FX risk.
Oh yeah, for sure.
Like if we set up a liquidity pool in USDC, the loans go out in US, you have to convert to ringgit.
Yeah.
Then your payback mechanism has to be pretty straightforward for the end user.
Yeah.
You're going to have a monthly payment. It's probably going to be in ringgit in Malaysia, right?
Yeah. So that becomes another risk that liquidity provider would have to bear for this to work out.
But that's where people like yourself and Kelvin over at Sinegy, who has experience in these hedging strategies, that's the kind of thing you would need on the back end to make this stuff work. Yeah,
in fact, I mean, like for Sinegy, if you know, like crypto prices are always priced in US dollar. Yeah. So when it comes to how we source the prices and all that, it's a constant or a daily work where we have to monitor the FX risk really diligently.
Yep.
And in fact, in our mobile app, we allow our users to actually see what kind of FX rate are we putting it out there. So if you look at the Bitcoin prices on our mobile app, you will see like, okay, so we are showing it in ringgit, but then like you just toggle it and you will see like this is based on what FX rate that we are displaying these prices. But yeah, it is not easy, but it does add another element of risk to that whole liquidity pool thing that you're talking about.
Yeah, and it's a problem that's sort of rooted, I think, in Southeast Asia as well.
Yeah.
If we want to broaden the conversation to Southeast Asia a little bit.
We should.
The currency conversion rates and so forth are always kind of an issue. We offer products overseas in US dollars. Typically, the services are priced in USD. But we're a Malaysian company, so obviously, some currency volatility, I think recently is a pretty good example. The ringgit's been pretty strong. I think strongest in Southeast Asia this year, if I'm not mistaken.
It is. I mean, like if you compare it to the recent depreciation of your Indonesian currency, the Filipino currency, ringgit, I mean, it is definitely the strongest, I think, not just one of the strongest.
So now all of our revenue in dollars is suddenly weaker.
Yeah, I guess. I mean, maybe that gives rise to a potential use case for a ringgit stablecoin.
Yeah.
Right. I mean, like you were just saying about how all the FX risks and whatnot is additional risk that maybe you don't want to take on in the beginning when you're bootstrapping the whole thing. But having a ringgit stablecoin for liquidity pools that is predominantly being used in Malaysia could eliminate this risk?
Yeah, I think there's a lot of solutions to problems that come from what your team is working on, and I'm hoping that our team also can adopt some of these in the near future as well.
Do you see the verticals in fintech kind of overlapping? I wouldn't say converging. So like, I mean, we are a crypto exchange, and FinHero, like by definition, you would be more a credit risk agency, rating agency.
It's a services company for the most part now, but we've spent the last couple of years applying for our CRA license. That's the credit reporting agency license. So we're not officially able to be that reporting agency yet.
Soon.
But I think it's pretty soon. We're just a couple of check boxes away.
So your roadmap, like if I were to try to put it, it would be a credit rating agency that would be powered by AI, while leveraging on decentralized finance to solve certain roadblocks that you have. Yeah,
or that would be the solution to the lack of liquidity providers for our programs, and our gateway, our tech would be able to be plug and play for these types of solutions, such as stablecoins.
Yep.
Instead of only allowing traditional financing.
Have you tried exploring working with existing lending protocols, liquidity pools out there?
Not yet, not on our platform, largely because of the regulation problem that you mentioned.
Yeah.
So it's not worth it for me to put resources all into that quite yet.
Okay, yep.
But these days with AI coding and the ability to kind of prototype things quickly, I think I can manage to start to add a side project along
AI coding, which is
a
pretty exciting topic these days. Tell us more about how you do it. I mean, Kain, I heard you're mad at this.
No, I mean it's kind of a long one, so let me digest. So these days the problem I'm trying to solve is managing different agents doing different tasks, maybe even in parallel, and doing it in a compliant way.
Compliant way?
We are at FinHero. We are an ISO 27001 compliant company because we need that for our CRA license. So there's a lot that comes with that, but just for the sake of the podcast and time, I'll just say it like this. One of the primary requirements of a CRA and these ISO 27001 standards is you have to have an audit trail with everything. So there's this tension with AI where AI is kind of like this nebulous sort of stochastic system where you don't know what you're going to get out of it. And what I'm trying to do is maybe solve that problem by adding layers of audit trail support to what your AI was thinking at the time it made a decision. And so you can have systems that have a trail of thought and decision making and changes throughout your system. That allows you to solve the change management problem, which is baked into ISO 27001 and other compliance standards. So that AI can be friendly in this arena.
I think what you're trying to say is that, like what we were saying earlier, like AI is probabilistic.
Yeah. Most of the time.
Yeah, but at the same time, like let's say what FinHero is doing, it has to be deterministic at the end,
or at least explainable in some kind of audit.
Would you say separating them into maybe like three different, not to say departments, but let's say this agent is for intent, one agent is for orchestration, and then the last agent is only for evaluation would basically solve this problem? Because right now, I think what we're seeing is that agents do hallucinate. And even though the
especially the small models,
especially the small models, right? And if you were to take, let's say, even if the hallucination only happens like 5 times out of 100, it's still a 5% confidence interval that you need it to be way thinner. So like, how do you think we can solve this?
Yeah, I think when it comes to, let me just take an example to make it clear. So instead of being abstract, we'll take the example of agentic lending, right? So agentic credit scoring. If I'm going to have my AI do the underwriting, it's going to be really slow if I use a frontier model or a big model to process all these loan applications. And it's also going to eat a lot of money and tokens. It's maybe going to cost more than a traditional underwriter.
Yep.
Who knows, right?
Yeah.
So the balance ends up being I want to choose a small enough model that's fast and affordable, maybe even on a local machine, so that I can run it on-premise. Sorry if that's not a well understood abbreviation. So an on-premise machine that can do the AI on my machine very fast, so that I can do many loan applications. But you're right. If that thing is hallucinating and has a problem, there needs to be an audit trail for that. There needs to be accountability. And so I'm trying to design kind of a hierarchy of lower level AIs that do quick work, but then the result is checked by a smarter component.
Yep.
So maybe a confidence level bubbles up to a smarter, bigger AI.
Yep.
The amount of low confidence scores are much less than the total amount of runs over the course of let's say like a big parallel sweep of a bunch of loan applications.
Yep.
So then, let's say if only 25% of 1,000 loan applications have a low confidence score, then a higher frontier model can come in and only have to process 25 out of 1,000, or whatever the percentage ends up being.
Yeah.
I'm sort of making these numbers up.
That would be more on basically optimizing the cost of your LLM API cost, right?
Exactly.
By
Yeah. Especially if you use APIs, you're going to be running up costs and realizing that in this innovative world of AI that everyone's talking about, you might as well have just hired someone to sit there and crunch numbers.
But what if you build? I mean, you were saying you like your open source stuff, like so.
Yeah.
Technically, if you take a model online, take it up, and then like you start training the model, do you see that it's a possible roadmap for FinHero to have a FinHero AI?
Oh yeah.
That you can run locally and don't have to worry about the LLM API cost anymore.
Yeah. So one way is running local models, and what I've found out in my research is actually the model itself is not usually the problem. It's the prompt. It's the harness. It's the setup. Is usually injecting inefficient variables into the system.
That's from your experience building OpenClaw recently, right?
Yeah, I have a new open source project.
Tell us more about it. Like, I mean,
Yeah.
what's compaction? Tell me.
So, yeah, this is one where I found this out with some scientific runs, and I was changing little variables and thinking, oh, I'm optimizing this thing. But OpenClaw was my gateway, and what I finally realized is that OpenClaw has compaction heuristics or algorithms under the hood that fire off quite frequently for small models.
Yep.
So it's almost as if by default it's built for the frontiers, which don't have to compact that often.
Yeah,
And
you
so
don't have to.
when your context size is smaller, you really have to make good use of that context.
Yeah.
When it compacts, it's like a model almost losing its history of what tools it used and what were the reasoning that came along to make it get here.
Basically
and then compact. Yeah. I don't know where I was, so I start over. And then that was my optimization problem.
Yeah.
Well, one of them, one out of many.
I mean, it's basically trying to remember what happened or what was said like 3 days ago when you could be not very sober and trying to remember all that, and that's basically a little bit like compaction, right?
Right.
That's another potential issue, is that FinHero would be handling a lot of sensitive information, because when someone submits a loan application, all the information is right there, right? So for AI, how do you see how important it is to have our own locally run model versus just using our cloud models that basically most of the frontier models?
Yeah, I mean, some of the frontier models are compatible with ISO 27001 and these standards.
Yeah.
But you're still sending your data off somewhere. So we're not allowed to do that for loan applications at this point in time because of PDPA, right?
Yeah.
Personal Data Privacy Act. So you're right. To process these loan applications locally on the machine requires local AI to be dependable.
Yep.
At least for now, until we get regulatory clarity on a lot of the AI standards that are moving so fast right now.
With all the AI stuff moving so fast, right? And how you trade yourself, so you follow a lot of the crypto news as well. how important is the Clarity Act going to be, not just for crypto, I mean for traditional finance as well? When the banks, the top executives looking at how potentially US going to pass this, how do you think all the banks are going to react?
I think they're already reacting in a way. You can see, like I mentioned earlier, Fidelity is setting up with a stable
How
coin.
about Malaysian banks?
So Malaysian banks, I wouldn't call myself an expert on this, but I have been in some meetings with some of the banks about similar topics.
Yeah.
I'd have to say that they're going to be a little slower than the US to adopt this. I think in the US, given that it's in the crucible of all this, tech, and obviously in the government and in Silicon Valley, and all the leaders are coming together all the time to work these things out. You don't really get the same cohesion around these new tech topics, I think, here in Malaysia, and I think that's why some things are a little slow. I think in Malaysia, though, and especially here in Penang, there are industries that are advanced, like semiconductors.
Oh, yep.
And so that feeds into the AI loop.
Yep.
And data centers are rolling out here,
like crazy,
like nuts. Yeah. So, and I think that's going to be the story for Malaysia. I think is going to be one of the hardware meets software, and getting that resident tech story down. Because just throwing in another little tidbit of fact here is if you're going to be a CRA in Malaysia, your data has to stay in Malaysia.
Oh yeah. Same like any financial institutions. So basically, all the banks, they must have the data centers in Malaysia.
Yeah.
I think that is a yes and no. I mean, like what you said, Malaysian banks might move slightly slower, but I mean, based on my conversation with certain Malaysian banks, I can see that the moment the regulator shows clarity, I think they're going to move really fast. I think the problem is when there's no certain amount of clarity, the banks have probably too much to lose in pushing all these buttons, right? So, but when they decide to move, companies like ours are there ready to work with them.
Do you get the feeling though that the big institutions wait for someone to prove it first?
Oh yeah, for sure.
Yeah.
I think that's the natural law, right, of size. Yeah. Like the moment you get to a certain size, you not just financially, your reputation is at risk. Yeah. You don't want to be, making terrible mistakes and come out first news.
You don't want to be the one who dives in head first.
Yeah, but that's fine. I can understand that. I can understand that. But I think a lot of them will see what the US banks are doing. They will see what some Singaporean banks are doing as well. I saw DBS experimenting with JP Morgan on tokenization of their deposits. So basically, if you have a deposit with DBS, you can basically transfer it to like JP Morgan, and they're already piloting that.
Okay, didn't know that.
I think Maybank is doing something similar.
Yeah.
They are piloting with.
That's probably your industry leader right there, right?
Oh yeah, 100%. They are the biggest. So I think it's the amount of clarity that these banks have, right? The moment they're given the green light, I think they will go for it.
Yeah, I think this time around the tech adoption curve is going to be super fast.
Yeah. And I think they do pay a very close attention to what's happening in the US right now.
Information travels quickly these days.
Just today, I think I saw the news of a Korean bank paying $670 million US to buy a Upbit, which is a crypto exchange platform.
Right. Yeah, I saw that.
So I mean, it's a whole like multiple factors all happening, right? From the X402 that we talk about, the agentic finance, open claw, what FinHero is doing, what Sinegy is doing, crypto exchange, AI powered CRA. So I mean, it's a multitude of factors that are pushing all these institutions to look outward as well.
Yeah, and we only have an hour here, and we can go in so many directions. but it's been great. Been great talking to you here, and
great.
Just want to thank Digital Penang again. And encourage people to follow, like, subscribe, all that good stuff at
Hit Digital the like Penang. Button.
Yeah, and we've had a lot of fun here. Hope you did too. And that's all for us today. But thank you very much.
Thank you. Bye-bye.
Malaysia's digital economy is booming, and Penang is at the forefront. Our journey began with the Digital Transformation Master Plan. Today, Penang is Malaysia's fastest-growing startup ecosystem. Building on a foundation of strong, equal partnerships, the Digital Economy Master Plan is born from a process of deep, multi-stakeholder engagement. DEMP is a roadmap built on 4 strategic pillars: digital government, digital economy, digital society, digital foundation, and driven by 16 strategic initiatives. We will leverage our unique strengths: a strategic gateway to global markets, a world-class manufacturing and logistics ecosystem, and a thriving hub for talent and innovation. We create a future of high-value jobs, sustainable growth, and an enhanced quality of life for every person in Penang, strategically aligned with national and state goals. DEMP is our blueprint for building the future of Penang. Together, we build our new digital dawn.